Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day as well as end of week market recap for Friday, December 6th. So, what a nice end to the week. I mean, a very nice week for growth investors. Really big outperformance between growth stocks and value stocks, particularly if you look at energy, if you look at metals and mining, if you look at home builders. Those did not have a good weekend. I'm going to review that performance with you in just a second. So it is very much a stock picker's market. You've got to be in the right stocks. You've got to do your homework. You've got to, notice what areas are doing really, have clean setups and are consolidating and look like they're going to break to new highs, and then breaking to highs and having continuation. That's what this market is about. The other things are just out of favor right now. They may come into play soon, and that's why we're in front of the screens for a good portion of the day to watch for those things to begin to turn back up. I'll go over a couple examples with you in just a second. Before I do that, risk disclaimer in front of you: everything that we're going through is for information purposes only, not giving any advice or recommendations. So one heck of a week to go through. I'm just gonna, being it's the first week of the year, of the month, and then it is the last month of the year. But we also have strong seasonality, so that is also giving a tailwind to a lot of these growth stocks as well. But just looking at my performance for the week, I mean, very nice to kind of just sit and be in some positions. Astera Labs is a big winner for me. Tesla was a big winner for me this week. Broadcom, Datadog was a very nice reload of a winner. Blackstone, which I did go out on a little bit of a limb and get involved in a financial company, was able to take profits in that yesterday. Um, what else? Yeah, and a few others further down the list, but this was a very nice week to start the month. Okay, so let's talk about. I'm going to show you. This is today, and I think you can kind of tell, like, the names, the areas that went down. I kind of sometimes I focus on this first, but look at the utilities, right? Look at energy. Various different energy ETFs down, and metals and mining. Right, gold, silver, kind of a bit out of favor as well. Then look at what did well. I mean, this has been a theme now, for since, well, I mean, at least since the beginning of this month, but actually going back into November too. But crypto's had a big week with Bitcoin crossing 100,000 and crossing back below and then crossing back above. Real nice move today, and the crypto stocks led. Biotech actually did pretty well today. Consumer discretionary tech. Look at XLY up another 2% this week. So as always, I'm going to give it to you, like, I give you is like the full glimpse of the market so that you could kind of judge too about what you think is going on. And now that we're in, and we've been in since November, of, like I said, a very strong seasonal period. But you could see how this month is shaping up so far, right? You've got some very good winners. I would point to here's growth of 3.5%. Here's value down 2% for the month. So there's some winners and there's some losers. Let's start with the S&P chart. So as I mentioned, and I talk a lot about this in my midday commentary, right? The 5-day, once we're breaking above the value area, which basically means that we're breaking out, right? And we're breaking above the current range here. So, I mentioned this earlier in the day, but like Darvis, like if you've ever read that book, what is it? How I made $8 million in the market, or something like that. I'm paraphrasing a little bit. But Darvis talks about like the Darvis box, right? What we do with the MarketWebs is when we look at these value areas, we're putting statistics behind them. So it's telling us once a name or a group of stocks or an index like the S&P 500 is moving above its past range, right? And that's what we have going on in the S&P. It's breaking out, and it's above now. Once it gets above the moving average like this, and significantly above the moving average, excuse me, once it gets above the value area like this and significantly above, I begin to draw in the value areas. And right now, the S&P is trending above its 5-period moving average. Now, think about what it's market weighted, and the biggest stocks are going to have the biggest effect. That's just how a market cap weighted index works. I see a lot of people always argue about that. They say, oh my God, that's the biggest companies that are pulling the index up. Well, yeah, that's how a market cap weighted index works. But it's how it functions on purpose. The bigger companies get a bigger weight and they have more impact. And the bigger companies are acting pretty well right now. There's many of them that are breaking out. Now, So I do rely on the 5-period moving average to tell me about number one, the short-term trend. Second of all, about momentum. If we're riding that 5-period moving average up, there's momentum in the market. So here's the cues, right? This had a huge week this week, right? And it was, remember, this is, you have to go back to what kind of a market we're in. We're in a bull market, right? This was underperforming a couple weeks ago as it did not reach new highs, and things like I think the S&P and small caps were, right? But that's what we've got, in bull markets. We get rotation, and big rotation this week into your mega cap growth and tech names, consumer discretionary, the likes of those. Really nice outperformance. Now, let's talk about IWM for a second, right? This nowhere to be seen this week. I mean, I think, as I've said in a few of these videos this week, that's okay, right? It's just digesting, kind of like we saw the Qs do about, a week and a half ago. So I think what we really want to be paying attention to, because this is not trending the same way, but we want to be watching, the prices right now staying below the 5-period moving average, but above the 20. And I think if we start to break the 20-day moving average, then we've got some more issues on our hands, right? And same thing with the Qs, right? But if we break below the 5-period moving average, because we've got a significant distance between the 5-period moving average and the 20-period moving average. I use the 5 and the 20. Some people like to use the 10-day moving average. You could use whatever you like, whatever gets you to be a disciplined trader, right? It's not so much telling you what's, that you're right. Oh, if I use the 10-day moving average, I'm going to be more right. No, it's not about that. It's having a set of risk parameters. And if that's too far down for you, then yeah, you could take the 20-period moving average off your screen and put the 10-day. But I would be watching both the top of the value area and the 20-day moving average, right? And right now we're extending above that, right? So I talked about how IWM, we'll have to see if that comes into play as we progress further further through the month. Now, also, if you look at the same components as the S&P 500, this kind of proves my point, is that all stocks are not going up, and it's a stock picker's market. Because again, here's the same components in the S&P 500 market cap weighted, and here's the same components equally weighted, right? So it just tells you that the breadth is not super strong right now in the market. And again, it remains a stock. How many times am I going to say this? It remains a stock picker's market, meaning you've got to go out and find the ones that are moving higher and avoid the ones that are going down, right? Now, let's look at a couple of these charts. Okay, here's XLK. We know that the strongest component of XLK right now is software. This has been on fire as it breaks out to new highs. The semis are kind of in the middle of this, right? They caught a nice move earlier in the week, but they kind of stalled right at that top of the value area. So again, resistance right there. So again, nice move off the lows a little bit this week. Here's internet stocks, right? This is the FDN ETF. Very, very strong. Let's talk a little bit about consumer discretionary. Look at this thing blast off. Now, again, the two biggest weights in here. Sorry, I'm looking on the tape to see if we hear about the S&P inclusions, which we should be getting shortly, right? Candidates for those are AppLovin, Coinbase, what's the AGO, excuse me, APO, Apollo Group, Datadog, the Trade Desk, Square. I think those are to name a couple. We'll see what we get. But back to my point here, right? So this has been very strong, and looking at the top two components, here's Amazon, which has been a beast, moving higher again. Look at how strong this breakout is at this point. I haven't heard much about Bezos selling lately, so maybe and I think, like, I heard this tweeted out like a couple weeks ago that he was almost done with his allotment. I didn't know if that's 100% true or not, but maybe he's getting close. And like, look at the move in Tesla. Tesla, I believe, still holds some Bitcoin. Here's, speaking of which, Bitcoin and what Bitcoin did. Very nice, like, check back in here. And then the break back higher above the value area. I also look at IBIT because I trade IBIT a little bit more, but this did not, of course, take out, and just an inside day. So just keep that in mind. But I've got my level to watch, and that's 56.10. All right. And, I've been talking about this, that sometimes you can get some ugly looking candles, but if you don't lose that 5-period moving average, and in this case, the top of the value area, then all is not lost in terms of the trend. All right. Now let's take a look at a couple uglier charts. Right. So we went over a couple of the positives. Right. Let's take a look at a couple of the other ones. And this is like if you're not in energy stocks, you're okay. But this has really been breaking down hard. Right. And again, it goes back to like it's a little bit counterintuitive with under, for example, a Republican administration or a Democrat uh, administration. You have to remember supply and demand, right? The more that they turn on the spigots, right, then then there's less, then prices don't go up as much, right? And that's kind of what you have going on under the when Trump was president first time, energy stocks did not outperform, right? If you go back to that, right? So it's not just about like a favorable environment, it's also about supply and demand. You keep increasing supply, right? And prices aren't going to go up as much, right? This is XME, this is metals and mining. Look at the move that this had down today, right? And then look at the difference between what gold is doing, right? Gold has basically done nothing, right? I got out of gold once we kind of broke down here a little bit. It had a little bit of life to it, but the bounce was short-lived, and we're back below the 50-day moving average. Now, again, from just classic trend trading, if something's been in a trend for a long time, and gold has been in a trend for a long time, I would be avoiding it below the 50-day moving average, right? It's kind of in no man's land between the 50 and the 200-day moving average. When things are above the 50, it's kind of a green light. Here, I would say yellow light to red light, especially the longer that something's in a trend like this. When something breaks the 50-day moving average, it's usually not very good. All right. So that's a little bit about like, what's been going on. And take a look at the trend here in IBIT and GLD, which I love how in TradingView that you could do this, but this is the trend to be in right now, since the beginning of November is basically long Bitcoin. Now you don't have to pair that with short gold, but it just shows how it's really outperforming. All right, looking at the weeks, I mentioned I would bring up the week's performance, and you could see like this was not a week for small caps, down 1.2%. Also, Dow stocks did not do pretty well. UNH is, I think, a big portion of that. UNH really fell a lot the last 2 days. That's weighing on the Dow. So the Dow finished for the red. Mentioned gold finished down, and I mentioned how value did not do well. Bitcoin was up 4.7% for the week if you're using the Bitcoin ETF to measure that. And of course, big outperformance by Qs and big outperformance by BUG of 3.5%. We already went over the internet FDN ETF up 5.5% in consumer discretionary tech. Semis did okay this week. Most of that performance was a bit earlier this week, not so much today. And retail squeaked out a gain for the week, although mixed results. That's always how it is in the retail group. You have to be really in tune with fashion trends and so forth, because some retail companies are going to do well, some are not. That's why often that group trades sideways a bit. But the communications ETF, nice breakout by Meta today. Up that group was up 2.6% for the day. I was just going to cover this block ETF. Right. This is more crypto names. Right. So this is another way that you could play this. All right. So if we went over this earlier in the trading room, block and then MHD. This is one of the ones that I use, Core Scientific. So there isn't a name in here that's over 5%. So it's a little bit more diverse. Coin is in here. Coin had a nice day, by the way. Right. A little bit of a shake and bake there yesterday. As well as many of the other crypto names, tried to go higher and got rejected, fell right back in. By the way, if you think that you've missed anything in Coinbase, you really haven't, because it topped out here in the beginning of November at this VPOC and it's just been going sideways. So it did not close on the absolute new high for the day, but did not close on the highs of the day. But you've got some support to trade here at 330. I've been including this chart in my midday notes the last couple days. All right. The other ETF that I like in this space is DAPP. Right. This one is a little bit more skewed. Right. This is also crypto names. So again, just giving you an option if you feel like this is a risky group and you want a little bit of diversification amongst the different names. MSTR is still 11% of this. Coin is your second, Square is your third, HUT, APLD, Mara, Corzi, and so on and so forth. I wanted to just cover the MSTR chart with you. Right, this is very interesting. We don't know if the candle here on November 21st was a blow off top. because you just need more time after that. So what this is doing right now is down into the 20-day moving average, and it's holding it for now. So we don't know if this story is over yet, or we don't know if that was the top, and it's like a capitulation type top, and we're going to start trending lower. We've seen this in a lot of different charts where you have this big run up and then this big move like this, right? And then you begin to kind of break down a little bit. So we've tested here a couple times and we're holding this 20-day moving average. So for now, I would just watch this 20-day moving average. Again, keep it, that's why I have these moving averages, because they really do a good sense of giving you, a sense of where that uptrend is and where it could possibly change. And that would be a break below the 20-day moving average. All right, and one last thing I'm going to leave you guys with is just looking at what I like to do sometimes is show charts from another period. What I'm just going to do is I'm showing the chart of SPY from last year. So why am I doing this? I'm not doing this to say that this year is going to play out the exact same way as last year, but there are some things. History does rhyme sometimes. It doesn't repeat, but it rhymes a little bit. And there's also lessons that you can learn. What I try to do at Tribeca Trade Group is get traders prepared so that they're not caught off guard. Right now we're in a trending market, but things could change rather quickly, right? Here's what we did in the beginning of last December. We had a nice ramp up the first week, first 2 weeks. I think that first 2 weeks of December last year, right? And then we kind of went sideways a little bit. And it's a reminder that we're going to have quadruple witching, not next Friday, but the Friday before. The Not this Friday, but the Friday after that. Sorry, I said the wrong thing there. But you're going to have shakeout days like this too, right? You're also going to have shakeout days that are followed by a little bit of a dip. So we managed to kind of hold in there. We had a little bit, remember the Santa Claus rally is the last few days of December and the first couple of January, right? The Santa Claus rally isn't any other period. That's it, basically. So we had this nice ramp into the first half of December, and then we kind of stalled a little bit, went sideways, grinded up a little bit, and then we kind of came in a little bit. Now that dip was short-lived, and then we went higher. So keep an eye on your moving averages, keep an eye, and ask yourself, run a scenario analysis. Like if we have one big red day that happens somewhere in between there, are you going to be okay with that in your portfolio? If the answer is no, then what do? You lighten up on your risk a little bit, right? And if you're okay with that, a little bit of a check back, and you feel like you want to stay the course, then you stay the course and you have another level of support, right? That's what trading is about. It's not about, listening to whoever on Twitter about making predictions. Nobody knows, nobody has a crystal ball. So you got to get that out of your head, right? And things can flip around pretty quickly. Option flows, like people love option flows, right? And it definitely, when there's a momentum market and when there's a bull market like we're in, option flows help a little bit, right? Because they kind of give you a sense of like some positioning, and the market already has a tailwind, right? So it's confirming a little bit, but there's also been some put activity too. So, they're gonna one of these, you know, both have a chance to be right, in terms of what we're seeing in terms of put activity, right, and what we're seeing in terms of call activity. So there's been some index put activity, right? You'll notice that the people, like I'm very objective about this stuff. You'll notice a lot of people, when that stuff doesn't work, they won't ever mention it again. I mentioned both because, it's probably a little bit of index hedging that I would think is going on as the market continues to go higher. So the bottom line is have a trading plan, understand what you're going to do, understand how you're going to react when there's a little bit of volatility on the tape, because right now right now the VIX is sitting at 1277, which is a pretty low level. Looking at the radar for next week and what we've got ahead of us for next week, right? So look at the economic calendar, because sometimes economics will give you a little bit of volatility, but you're going to get a CPI report next week, right? You're also going to get a PPI report next week. All right, guys, I'll leave it there. Have a great weekend. Very nice week of trading. Hope it continues, but always have a trading plan so that you can resort to in case the price action isn't as great as it was this week. Thanks, everybody. Have a great weekend.